Let's talk about one of the companies that basically acts like a toll tax collector on the whole economy, Mastercard. The company came out swinging in Q1 2024, boasting an impressive 11.4% year-on-year increase in revenue. This translates to a significant boost in their overall financial well-being. But the good news doesn't stop here. Adjusted net income, a key metric that reflects profitability after accounting for certain adjustments, witnessed a stellar 16% jump. This growth can be attributed to two primary factors: a healthy increase in transaction volume and the continued global shift towards digital payments. Consumers are increasingly ditching cash in favor of the convenience of digital payment methods, and Mastercard is at the forefront of this revolution. Now, I have a lot of negative things to say about that, but I will leave this for another video. To add some context, operating expenses grew at a modest 9%, which is well within expectations and doesn't include any major impacts from recent acquisitions. Earnings per share for Mastercard jumped by an impressive 19%. They landed at a healthy $3.31, beating analyst expectations with 7 cents. This demonstrates Mastercard's commitment to rewarding their shareholders. In fact, they repurchased $2 billion worth of stock in Q1, with additional repurchases happening through late April. This is a clear signal that Mastercard's management team is confident in the company's future prospects and is actively looking after the shareholders' interests. Now, let's dive deeper and explore the specific factors propelling Mastercard's growth. Here, a few key trends stand out as the cornerstone of their success. First, travel makes a comeback. While travel growth slowed slightly in April due to the timing of Easter, Mastercard remains optimistic about the travel sector's long-term prospects. They see a significant opportunity fueled by a post-pandemic surge in consumer desire for experiences. People are eager to travel again, and Mastercard is well positioned to facilitate those journeys through their secure and convenient payment solutions. Second, digital payments boom extends its reach. There's a massive, largely untapped opportunity for Mastercard to expand digital payments globally. This is particularly true in cash-reliant economies like Indonesia, where you have over 70% cash economy, and Mastercard can play a key role in driving financial inclusion and economic growth by offering digital alternatives to traditional cash transactions. Beyond traditional retail transactions, Mastercard is also strategically targeting new and growing sectors like healthcare and rent payments. By expanding their reach into these areas, Mastercard can further solidify their dominance in the digital payment landscape. Now, understanding how Mastercard navigates the competitive landscape is crucial for gauging their long-term resilience and growth potential. Here's a breakdown of their strategies. First, thriving in the European area. Europe continues to be a significant growth market for Mastercard. They face competition from established players and regional competitors, but their focus on providing exceptional customer service and forging strong partnerships positions them well. Mastercard emphasizes understanding and catering to the specific needs of European consumers, which they believe gives them a competitive edge. Additionally, they are actively converting Maestro cards to debit Mastercards across Europe, further solidifying their presence and streamlining their product offerings in the region. Second, the US debit market shows positive signs with a healthy 6% growth in Q1. While regulations like Reg 2, which aim to increase transparency around interchange fees for debit card transactions, have had some impact, it's not a major concern for Mastercard. Third, reorganizing for the future of payments. Mastercard is actively undergoing a strategic reshuffle to ensure they stay ahead of the curve in the ever-evolving payments landscape. They're realigning their focus areas around three core pillars: core payments, innovative payments flows, and integrated services. This strategic shift positions them to capitalize on emerging trends and technologies that are transforming the way people and businesses pay. Additionally, they're establishing a central role for artificial intelligence, particularly generative AI, to accelerate innovation and deliver greater value to their consumers. By harnessing the power of AI, Mastercard can automate tasks, personalize offerings, identify fraud before it has done a lot of damage, and identify new opportunities for growth. Fourth, investing in brand recognition. Mastercard plans to ramp up advertising and marketing throughout the year. They clearly recognize the importance of maintaining their position as a prominent consumer brand. A strong brand presence fosters trust and familiarity with consumers, making them more likely to choose Mastercard for their payment needs. By strategically allocating resources towards targeted marketing campaigns, Mastercard can ensure their brand stays top of mind for consumers around the world. Mastercard's Q1 2024 results paint a picture of a healthy and growing company with a clear vision for the future. They have a practical duopoly with Visa and are like a toll tax for every digital transaction we make. Although I currently don't have it as a single stock in my portfolio, it is one of the top positions in the ETF I have chosen to include in my free top 4 stocks and ETFs report for the current environment we are in, which you can check in the description. Now, something important to discuss is Mastercard's dividend growth. The company has a low yield, but the growth has been fantastic, standing at an astonishing almost 22% compounded annual growth rate for the past 10 years. While it's really impressive, a common mistake both new and experienced investors make is to extrapolate that growth indefinitely into the future. I have also seen some YouTubers from the dividend investing community do that, and I won't name them here because I don't want to start a fight, but it is really dishonest to their audience to mislead them in such a way. That rate of growth is impossible to continue for decades ahead, because if it did, Mastercard would be an over $600 trillion company with a T. If you're wondering what do I mean, how did I come up with that number, and what are the dangers of some of the dividend growth lies being advertised by some YouTubers, make sure you check this video I did on the topic. Check the disclaimer in the description, and I'll see you there.